very good evening to all our viewers. You're tuned into WION World is One News and you're watching WION Wallet with me, Chaiti Narula. As always, let's take a quick look at the headlines that are making its way at WION at this hour. State-run Airport Authority of India plans to partially privatize two of its key airports, Ahmedabad and Jaipur, by this fiscal end. India's most important tax reform, GST, will roll out in July and not on April 1 as planned because of the unresolved disputes between the centre and the state governments over the taxation powers. Indian markets consolidate at the market closing hour with the Sensex shutting sharp, down 0.19% and the Nifty closing down 0.18% in today's trading session. Lastly, pound touched a three-month low against the dollar. Stocks were weak as investors are waiting for the Brexit plan from the British Prime Minister Theresa May. Well, this is very important news as far as global business and economics is concerned. The World Economic Forum at Davos in Switzerland begins today. Xi Jinping is expected to address attendees today, as this is the first time that a serving president of China has visited the World Economic Forum, or the WEF. The attendees are likely to discuss three key topics. First up, the Donald Trump and what to expect under his presidency. That's something that is going to be taking center stage at the World Economic Forum this week. Finance is the second point in discussion this week at Davos. This is the World Economic Forum, so finance is bound to get some attention, especially on how regulations are likely to change during a Trump administration and whether banks are planning to do their own exit from London following Brexit. Third point on the agenda is taken by automation and the idea that artificial intelligence will replace more workers and will figure prominently as it did at last year's Davos. State-run Airport Authority of India plans to partially privatize two of its key airports, Ahmedabad and Jaipur, by this fiscal end, for which the proposals have already been invited from the interested parties. Under the plan, which also involves relocation of workforce and equipment, the terminal operations at the two airports would be handed over to private players. The Airport Authority of India, which is the AAI, had in the past also proposed to hand over these two airports to private operators but had to shelve the plan due to manpower and revenue sharing issues. The process of partial privatization of Airports Authority of India is expected to be completed by March this year. Airport Authority of India will also raise its capital expenditure by 25% in the fiscal year starting April 1 to expand existing airports and build hangars for the hundreds of planes that airlines are ordering. Well, the big issue which India is facing right now is the lack of a certain resolve on the GST rollout, which is likely to happen this year. Now, India's most important tax reform, which is the goods and services tax, it's in decades, this has been one of the most important reforms that India will be looking at. It will now roll out in July and not on April 1 as planned earlier because of the unresolved disputes that I just spoke about between the centre and the state governments over taxation powers. Finance Minister Arun Jaitley mentioned this in the statement yesterday. The National Goods and Services Tax, or the GST, replaces a jumble of complicated levies and creates a much more unified market. The GST Council, a decision-making body that combines Finance Minister Arun Jaitley with his counterparts from other states, met yesterday and agreed that the April 1 deadline has been rendered unfeasible. We're now joined by our Chief Business Correspondent, Sumit Chaturvedi, for more on this particular developing stories. Sumit, good evening and thank you so much for joining us on WION Wallet. Now, what are the chances that unresolved issues between centre and states will be solved by July this year? I mean, they've been contending this for a very long time. They've not really come to a common consensus in such a long time. What will really change in the next few months, and why is it that we are unable to roll it out as per the initial deadline?
Well, Chaiti, the biggest issue of dual control has been resolved. Finance Minister Jaitley informed about this yesterday that on dual control they have reached on an understanding with the states. Well, the issue was like that, up to 1.5 crore assessees who will control them. Now they have reached the conclusion that 90% of these assessees will be controlled by, in the ratio of 90% to 10%, with 90% being controlled by state and 10% being controlled by center. That was the biggest issue which was creating a problem or hurdle in the way of implementation of GST. On the other hand, there are some other issues which are still to be solved, which includes the distribution of revenue or the compensation by states for the center. This is one big issue which is being debated still. West Bengal is still not in favor of this, and other states like Tamil Nadu are also being discussed with as far as this is concerned. So these are the issues which are still to be solved, but government is quite confident that in the next 6 months they will try to bring everybody on board. Another important point is that there is now very less opposition against demonetization. But earlier opposition parties were saying a lot of things against demonetization. They were saying that it shouldn't have come. Now this has mellowed down. This is giving a kind of confidence to government that they will be able to start the implementation by July this year.
All right, thank you so much, Sumit, for that update. Keep your ear to the ground on the GST developments, and we will track the GST development in much more detail very closely right here on WION World is One News. Now, moving on, as the union budget comes close, the Department of Industrial Policy and Promotion, which is the DIPP, has suggested a list of suggestions to the Finance Ministry, the Minister of State for Commerce and Industry, Nirmala Sitharaman, on the startup initiative of the Government of India. Take a look. It was just another Monday when the DIPP submitted a list of suggestions from the Indian startups to the Finance Ministry. The Commerce Minister hinted at tax ops for startups, and that hinted at a boost to startups in India. In fact, it was just last year when Prime Minister Narendra Modi had announced 80% exemptions in patent fee for startup businesses. The Atal Innovation Mission has had an initial corpus for 500 crore rupees. So what happened in 2016, and what must one ideally expect in 2017? Last year, a fund of funds of 10,000 crore rupees for startups had been established, which is being managed by SIDBI. Startups were also to get tax exemption for 3 years in a block of 5 years if incorporated between April 1st, 2016 and March 31st, 2019. There has not been much success after the last budget, as the central government has been trying hard and it's the state governments whose adoption has been low. A number of entrepreneurs in India this year complained that the eligibility criteria was too rigorous for the Startup India initiative of the Government of India. A call for change and better governance should be the order of the day. The upcoming union budget, according to experts, should have Indian startups exempt from compliances. Also, a case for simpler tax norms comes up. The tax holiday, according to analysts, should be extended to 5 years with a block of 10 years, and exemption provisions should be rolled out in the GST. The union budget this year perhaps will make sure that the startups are allowed to carry forward their losses in spite of multiple rounds of dilution in case of change of guards. MAT exemptions in the first few years could also be a possibility. Chaiti Narula for WION. After the OPEC nations decided to cut output to fuel an increase in crude oil prices across the globe, the global crude oil prices have increased. At the back of this move of the OPEC and non-OPEC nations agreeing on that production cost and eventually the price seeing a fair bit of an uptick, the Civil Aviation Ministry, as a part of its union budget recommendations, has sought a reduction in the excise duty on aviation turbine fuel, which is the ATF, to 8% from the 14%, which is currently the case. The government had increased the excise duty on ATF, or airline turbine fuel, when the global crude oil prices had fallen to $30 a barrel. Now, with the crude oil prices seeing an uptick, the government has been recommended to cut the excise duty on ATF so that the airlines need not pass the price increases to the end consumer. The entire benefit of the low crude oil prices was never transferred to the airlines, as the government capitalized on the increased tax collections.
We are definitely expecting more rationalization of import duty structure in the next budget, I think government needs to recognize that all type of public air transportation system, be it non-scheduled or scheduled, should have a uniform import duty structure. That is the one thing. The other thing we are expecting from the budget is more, tax concessions for the MRO sector of aviation, which actually is not being very competitive internationally because of the existing tax structure and the other service tax structures. I think we need to be more competitive compared to our neighboring country for India to become a MRO hub.
The Civil Aviation Ministry, for the first time, sent a budget wish list after having it vetted by consultants. The Minister of State of Civil Aviation, Jayant Sinha, called for a meeting of all players in the sector to discuss the budget demands last week. Chaiti Narula for WION. On that note, let's take a short break. Markets wrap up next. When we return, stay tuned to WION Wallet on WION World is One News. Thank you so much for staying with us on WION World is One News, and welcome back. You're watching WION Wallet. Now, pound touched a 3-month low against the US dollar. Stocks were weak as investors are waiting for the Brexit plan from the British Prime Minister Theresa May. Remember, she's speaking today, and that's what's really putting the European markets on tenterhooks, really. We will do a quick check of how Europe is trading at this point of time. But now, investors fear that Britain will lose access to the European Union free market. Theresa May is due to set out her 12 priorities for upcoming divorce talks with the bloc. These priorities are expected to include leaving the EU's single market and regaining full control of Britain's borders. This has reinforced fears of a hard Brexit, which has pushed the pound to some of the lowest levels against the US dollar in more than 3 decades. Asian markets also sagged on the back of hard Brexit anticipation today. MSCI's broadest index of Asia-Pacific shares, excluding Japan, lost 0.1% in trade today, while Japan's Nikkei brushed a 5-week low and it was down 0.4% at 1 point as well in today's intraday trading session. Japan's Nikkei stock average closed down 281.71 points or 1.48% at 18,813 thereabout levels after seeing and sawing between gains and losses throughout the session. The Topix index also slipped 21.54 basis points or roughly around 1.5 thereabout percent to 1,500 thereabout levels. The yen gained ground against the US dollar, strengthening to as high as about 113.32, up from the levels above 116 in the previous week on safe haven demand. The pound and yen cross-fell from levels about 140 in the previous week to about 137 thereabouts. The currency's relative strength kept major Japanese exporters under pressure. Let's take a quick check on how the Indian markets panned out today. The Indian markets consolidated at the market closing hour, with the Sensex shutting shop down 0.19% in trade today and the Nifty closing in at 0.18% in today's trading session. The benchmark indices in trade today were weighed down by metals, oil and banking and financial stocks. Gold ended up 0.73% in trade today and crude oil was up almost 1% in trade. As far as the currency market is concerned, the rupee closed at 67.99 to the US dollar and 82.62 to the pound as well. The European markets, we'll do a quick check of how the European markets are panning out as we speak. They are edging lower on the back of uncertainty post the Brexit plan. And we will take a quick check on how they are trading as we speak. So as far as France is concerned, the CAC is down 0.73%, roughly trading at around 4,800 levels. As far as Germany is concerned, DAX is down almost 1% and FTSE 100, which is the UK's benchmark index, is down almost 0.5% in trade, trading at 7,200 thereabout levels as well. In the US, the Dow closed flat in trade, down 0.03%. S&P closed up 0.18%, and the Nasdaq closed up almost 0.5% in the last trading session. We're now joined by our markets expert Ashish Kelkar to do a quick check on how he thinks the Indian markets really panned out today. Ashish, a fair bit of consolidation really setting in today as far as the Indian markets is concerned. At the closing time, we saw the stocks end in the red as far as the Sensex and Nifty are concerned, but we saw a good start this morning. I guess that was because of the consensus that came in on the GST rollout, or was there any other trigger for the markets when it started off early but consolidated at the fag end?
Good afternoon. If we look at the index chart, if we look at the today's movement in the indices, clearly it was seen that investors are waiting on the sidelines and they are waiting for some triggers which would promote them, or which could give them an enthusiasm to go ahead and buy. Because there are 2-3 important events which are lined up today. The Brexit decision, another is a GST, which how the plans would come up. So investors are on a cautious mode. As far as levels are concerned, as discussed yesterday itself in the same show, 8,380 is a very important level for the Nifty. Yesterday I was telling in the same show that 8,380 is a level which should not breach, and that is what was happening today in the markets. So this again becomes a very important level for another trading sessions, next 2 to 3 trading sessions. Till the time we are above 8,380 mark on Nifty, I would say that bullish momentum would continue. But if 8,380 mark is taken off, then there will be a panic sell-off which can take the prices to 8,290 odd levels as well.
Right. I'm just taking a look at how much the Nifty closed in at today. Of course, below the 8,400 mark, but much above your benchmark of 8,380. Of course, 8,398 is the exact levels at what the Nifty closed in today. Now, oil and banking stocks, I can tell that these perhaps may have dragged the Nifty below the 8,400 marks today. Is that correct? And why is it that these stocks saw so much of selling pressure coming in today?
See, basically, if we look at banking stocks, they are going through a number of events. They are going through the pain period because of demonetization. Basically, this will help us in the long run, but as discussed previously, that there will be a pain in short term. So now there was a selling pressure in banking stocks as well as oil mining stocks, because as far as charts are concerned, there was a clear sell indication on the charts on big giants like ONGC, Oil India. So there were selling pressures which was seen on the chart, and because of the selling pressure, the prices started moving down.
Not just India, Europe as we speak is trading cautiously as well today. Do you think that is on the back of uncertainty of what the plans are going to be after Brexit, and the Theresa May speech which is happening later today is something that the investors are really waiting for?
Yes, definitely. Not only in Asian markets, but in European markets as well, there is an uncertainty which is due to the Brexit decision, the 12-step plan which we may come up with. So people are waiting for the actual outcome of and what are the plans going ahead. So once the plan is out, once we understand what are the next steps which would be taken by the government, British government, then definitely the next course of action will be clear, and then investors will take a direction properly.
All right, Ashish, thank you so much for that market check, but you just stay with us. We are going to come back to you in just about a bit. UK's Prime Minister Theresa May is addressing the Brexit forum as we speak, and we are going to find out as if we can go live to that, because it's very important as the markets also have been affected by that. And there you go, Theresa May on your screens. Let's take a look at what she has to say.
For ordinary working people at home. It's why that plan sets out how we will use this moment of change to build a stronger economy and a fairer society by embracing genuine economic and social reform. Why our new modern industrial strategy is being developed to ensure every nation and area of the United Kingdom can make the most of the opportunities ahead. Why we will go further to reform our schools to ensure every child has the knowledge and the skills they need to thrive in post-Brexit Britain. Why, as we continue to bring the deficit down, we will take a balanced approach by investing in our economic infrastructure, because it can transform the growth potential of our economy and improve the quality of people's lives across the whole country. It's why we will put the preservation of our precious union at the heart of everything we do. Because it is only by coming together as one great union of nations and people that we can make the most of the opportunities ahead. The result of the referendum was not a decision to turn inward and retreat from the world. Because Britain's history and culture is profoundly internationalist. We are a European country and proud of our shared European heritage. But we are also a country that has always looked beyond Europe to the wider world. That is why we are one of the most racially diverse countries in Europe, one of the most multicultural members of the European Union, and why, whether we're talking about India, Pakistan, Bangladesh, America, Australia, Canada, New Zealand, countries in Africa, or those that are closer to home in Europe, so many of us have close friends and relatives from across the world. Instinctively, we want to travel to, study in, trade with countries not just in Europe but beyond the borders of our continent. Even now, as we prepare to leave the EU, we are planning for the next biennial Commonwealth Heads of Government meeting in 2018, a reminder of our unique and proud global relationships. And it is important to recognise this fact. June the 23rd was not the moment Britain chose to step back from the world. It was the moment we chose to build a truly global Britain. I know that this and the other reasons Britain took such a decision is not always well understood among our friends and allies in Europe. And I know many fear that this might herald the beginning of a greater unravelling of the EU. But let me be clear, I do not want that to happen. It would not be in the best interests of Britain. It remains overwhelmingly and compellingly in Britain's national interest that the EU should succeed. And that is why I hope, in the months and years ahead, we will all reflect on the lessons of Britain's decision to leave. So let me take this opportunity to set out the reasons for our decision and to address the people of Europe directly. It's not simply because our history and culture is profoundly internationalist, important though that is. Many in Britain have always felt that the United Kingdom's place in the European Union came at the expense of our global ties and of a bolder embrace of free trade with the wider world. There are other important reasons too.
Well, that was Theresa May on the Brexit strategy, and we will keep tracking that in much detail and bringing you updates from the address of Theresa May. But that's it now from the entire team of WION Wallet. We'd like to thank Ashish Kelkar also for standing by and giving us that markets check, which is the global markets check. Thank you so much for joining us on WION Wallet. Join us in just about a few minutes as we bring you a budget special on the IT industry and the expectations, as we are joined by a panel of experts to discuss that topic. Take a break. We'll see you on the other side with Union Budget Special.